Welcome guys to another educational video. Max Capital here with Wall Street and Company. Excuse me for the quality of the video. I'm using my webcam. But today's video is about top-down analysis. I've been receiving a lot of requests after people doing the course, requesting for a video on how to do the market analysis. I'm going to sample a part of the actual course. If you guys are lucky at getting that free, not the whole thing though. But yeah, let's get down to it. But before we go any further with today's presentation, I'd like to introduce you guys to today's sponsor of this video, which is TOPFX. TOPFX is one of, as the name says, top brokers out there. They've been around since 2010, regulated in multiple jurisdictions. I've got were awarded for being the best broker all over the world. So with TOPFX, you can trade 600 plus CFDs with top grade conditions, best prices, you name it. So you can trade anything from Forex, indices, shares, metals, energies, ETFs, cryptocurrencies, and we also present a very good market analysis and education by Massini General, who has a PhD, and sometimes Sebastian Saliga, and later on myself. You can choose multiple accounts that you can trade from. We have a zero spread account, which spreads starts from 0.5 pips. This is very good for scalpers. Very nice leverage of 1:1,000. Minimum deposit there is $50. Then from a roll spread account, you can choose any currency you want to trade with. But a nice thing about this is that spread starts from 0 pips with your major pairs. That's your Euro USD, USD, JPY, etc., etc. Also available on CTrader or MT4. Now, if you're a seasoned trader that has also good enough capital, you can move on to our VIP account where the spread starts at 0.2 pips. Minimum deposit there is $50,000. Also available on CTrader or MT4. Going down, CTrader is one of the best platforms out there, and TOPFX prides itself in the fact that in the past 10 years, there hasn't been any glitch on this platform or any slippage, if you may, whereby you'd find that your stop loss is getting hit unexpectedly when price didn't even move that far. Now, my favorite as MT4, as you guys know, it's easy to navigate. There's quite a multiple of payment methods. You've got a Visa, MasterCard, SEPA, Swift, Google Pay, Apple Pay, Skrill, Neteller. We can also do your deposits and withdrawals in Bitcoin, which is instant. So we've got multiple payments methods, instant and fast withdrawals, zero fees on deposits. Now, if someone charges you a certain amount of money to deposit or to withdraw money, then that's how you know that's a scam. Now, if you want to join us, go to the link in the description below, click on it, and then register. And I have some amazing giveaways for you once I find that you've signed up under this broker. Now, let's get to it, ladies and gents. Next thing that I would like to share is, yeah, a bit of part of the Wall Street Trader course. Let me see if I can get there we go. So top-down analysis. Why top-down analysis? Sorry, let me put this at the corner or somewhere down here. Just a moment, ladies and gents. There we go. So top-down analysis. Why top-down analysis? When we do our market analysis technically, we want to start from a higher time frame perspective, and then go down with the charts so that we can trade the smaller time frames using the higher time frame direction. When I'm talking about small time frames, that's your 30 minutes, that's your 15 minutes or 5 minutes time frame according to my strategy. As far as high time frames are concerned, that's your 4-hour, daily, weekly, and monthly time frame. Top-down analysis, this is where we put everything together, basically in terms of the trend, level, and signal. Those that have joined our courses know how to follow that. So we'll use all these technical methods of technical analysis that we have been learned from the previous chapter to find, number one, high probability opportunities. By high probability opportunities, we're talking about A-grade setups that fit into our strategy and opportunities that are worth risking our money on, because you shouldn't just wake up and think about placing a trade without following the right analysis or basically trading according to your age, right? So the big picture, as I've said earlier, always prevails. So we always try to find the correct bias or the direction of the market by sticking to higher time frames. So one thing that I also want to mention here is that it is very important to give every time frame a task, okay? I don't want to find people doing their market analysis or direction of the market on a 30-minute time frame. So because according to me and my experience in the markets, there is no consistency within the lower time frames as far as direction of the market is concerned. The consistency lies with your 4-hour, daily, weekly, sometimes monthly, depending on the style of trading that you follow. So here's what we're going to do. We are going to first look at the daily time frame. We're going to open it, zoom out of the chart. By zooming out, we'll be compressing the chart so that we can see clearly the direction of the market. And then we're going to find the market direction by analyzing a series of lower lows and lower highs to see if it's a downtrend or an uptrend. And the next step will be going down to a 4-hour time frame. As it says, top-down analysis, start from the high time frame to the lowest time frame, right? So going to a 4-hour or 1-hour time frame, we're going to study the market structure and then find our major high and major low. So now this is going to give us that area of focus to say, this is the range where we're looking at opportunities from. And then lastly, we step down to your 30 minutes or 15 minutes time frame. That's where we're going to find a setup that is in line with the higher time frame bias or the higher time frame analysis. And then from that small time frame, we're going to wait for a change of character, which is going to confirm our entry in the minor trend. With that said, ladies and gentlemen, let us get down to it. Let me see here. Just a moment. Just a moment. I need to get out of this presentation, and there we go. There we go. Let us share this new screen now. Voila. There we go. In front of us, we have the Euro JPY. It's on a daily time frame. Remember, we said on a daily time frame, we're going to open our chart, squeeze it. By squeezing our chart, maybe you might find that your chart looks like this. Right. Let me remove a couple of things here. Close that. Okay. So by zooming out, this is what you're going to be doing, right? Squeezing your chart so that you can see clearly the direction of the market. Now, I don't know how far back you need to go to see the direction of the market, but personally, I don't have to go that far. As I can tell, it's a low. We have a higher low here. We've got a higher high here. I've got a higher low here. We've got a higher high over there. We've got a higher low here. So we're anticipating the market to give us a higher high and then drop down, give us a lower low and push to the upside. What does this mean? This means that the market is going up and we're going to be looking for buying opportunities only, nothing else, nothing else. This is very important because why are we looking for buying opportunities only is because the direction of the market is going to the upside. So you need to move with the direction of the market. Now, if you start looking for selling opportunities in this kind of market condition, you might find yourself on the wrong side of the trade or losing a couple of trades, right? With that said, let me try to clean up the charts. I think we've seen where potentially this market is going. So as far as my major high is that, my major high low is this one. So I'm looking for buying opportunities within this space since the market is giving me bullish sentiments. Stepping down to a lower time 4-hour time frame. Now this is where we look at market structure. I'm sure you can tell that even the minor structure is still giving us the same thing. We keep on seeing these highs being broken. So this is a sign that the market is pushing to the upside. So hello, high, hello, high, hello. This was the last high. So when you look at the last impulsive move, this is the last leg. So here's what I like to do. I like to pull my discount versus premium tool. So whatever is up here, it is the premium level, which is where we're supposed to sell, and whatever is down here is our discount at level where we're supposed to be looking for buying opportunities. And right here in the middle is equilibrium. Since this market is going to the upside, we'll be looking for supply or demand levels that are within the discounted zone. So with that said, let me zoom into my chart. Personally, I see a couple of demand levels here. So personally, I would pick this one. We've got this one. We'll also have that one down there. All right. Why am I picking this one? Because this one is the one that's responsible for breaking structure to the left-hand side of our chart. Let me see if I can annotate that. Last I had. There we go. So we broke structure on the left-hand side. So now we're supposed to be pushing to the upside. Let me remove that tool. So voila, this is how we find trade setup. So here we'll be expecting the market to push to the downside, or we change character and push further to the upside. There we go. We've got a nice setup there. Potential. Yeah, even if we go to that major high, it's a 7-hour trade, meaning if you're risking 1%, there's a potential 7%. Personally, I risk 0.5% on the proprietary accounts, and I'll be expecting a probably 3.5% return on this trade setup. Now, here's the hard part, is the waiting part. You have to wait for the market to come back and validate this setup for you, right? Let's look at the AUDUSD. AUDUSD. Right. It's not analyzed, right? Again, let's go to a daily time frame, squeeze our chart to see the direction of this market. This one, to me, looks like a very nice bearish market. I'll start from this high. We've got a lower high there. We've got a lower low right here. We've got a lower high here. We've got a lower low here. We've got a lower high here, which is the same level as this. So this is still a lower high, and that's a lower low, right? So with that said, also just seen something interesting here. So it's clearly moving to the downside. So what are we looking for here? We're looking for selling opportunities, right? And then stepping down, cleaning up our chart and stepping down to our 4-hour time frame, trying to find that major lower high and lower low. So I think this is quite clear and simple at the same time. So I'm looking for selling opportunities within this range, since the overall direction of the market is to the downside. So not forget that. So you take the high time frame bias and move down to the lower time frame with it, right? So what do I see here? Where is the last leg? Last clear impulsive leg for me, starts from here to that downside. There we go. Right. So remember, everything that's here is discounted. Everything that's here is premium price. So what are we looking for? We're looking for a supply level, since we're looking for selling opportunities, right? On a daily time frame, we found that the market is going to the downside. So what we'll be looking for here, we'll be looking for a supply level. We sell it supply, we sell it resistance, right? Same thing. So looking for a supply level. Personally, I think this goes with experiences as well. Remember, we're going to look at anything that's above equilibrium. So personally, I would go with this one. Change that to supply colors. There you go. Personally, I would go with that one. So I choose the last bullish candle before the drop to the downside. That's how we find our order blocks. So starting from the opening price to the highest price of that bullish candle, right? Let me zoom out a bit. So there we have it. So what we'll be anticipating here is for the market to push to the upside and then drop, and then we take it all the way down with us, right? Probably to this area. So when you look at this, I'm pretty sure it's going to give you a nice risk reward ratio setup. Stop loss just a little bit above that region. Look at that 10-hour trade setup. And there's something interesting here that we teach in our course, equal lows. So when you look at that, this is trend line liquidity, right? So the market is expected to take out this liquidity. But personally, I think before that, the market needs to push to the upside because there's also some liquidity lying here. So I think it has to take out this liquidity first before it can push to the downside. Now, in order for us to have that magic number, 3, let's analyze the third one. Let me think. Let's just analyze NASDAQ. Let's see how NASDAQ looks. May remove any drawings if there are any. There aren't any. Right. So NASDAQ. So where is NASDAQ going? I know a lot of you guys love this pair, right? So I'm going to start from this high. We've got a lower high here. We've got a lower low here. Still on a daily time frame, looking for direction, right? We've got a lower high there. We've got a lower low here. I'd like to believe this is a lower high since the last one was there. So I'm going to mark my measures now. So that's going to be my major lower high and the major lower low right here. There we go. So what are we expecting here? We're expecting this market to push to the downside. It's very important to get direction right first, right? Now stepping down to a 4-hour time frame, let me move that. So we'll be looking for selling opportunities within this range. Let us see. Let us wait for our chart to load properly. Plan is to make this video as short as possible so that you guys watch it to the end. Don't forget to comment, like, and subscribe if you're new to this channel. All right. Once again, last leg. This is last leg that's in line with the direction of the market. So this is what I see. So I'm looking for something in the areas of premium levels, not discounted. Premium because we're looking for selling opportunities. Look like the market reacted to this supply. However, I don't trust it because there's a lot of liquidity that lies ahead. Hence, liquidity is just equal highs, right? We've got a high here, we've got a high here. They are in the same line, another one here, that touch. So market is expected to push to the upside. There's also some imbalance right here. Imbalance here. So I'll be expecting this market to tap into that imbalance and then push to the downside. Meaning, as far as selling opportunities are concerned, this is the premium area that I'll be looking at. Removing my risk reward ratio too. So just to map out what I'm anticipating with this, I'm expecting the market to push to the upside, probably change character there, and then boom, drop further probably to that low. We've been way past it since we are in a downtrend, right? Now this is a very volatile market. I don't know, man. I don't know. You can take your buying opportunities. to mitigate that major area of supply there. I don't know. I've got an area of minor area of demand here. So maybe the anticipation could be that you see we've got liquidity here, right? So those that trade patterns would see a flag, right? Something like that. I don't trade patterns anymore. That's where I started, by the way. So before this major turned to the upside and a drop, maybe you can also anticipate this. It's also very important to map out the possible versus the probable, right? What do I mean by that? This is gonna look like a nice setup. Let me step down to a 30 minutes time frame. I don't know. Maybe this is what you guys should have your eyes on as far as NASDAQ is concerned this week. So we've got a break of structure on the left-hand side, nice clean one, and the market impulse to the upside. Boom, nice leg to the upside. You can also come and put your premium versus discount too, just to confirm if we're in the right area. Yes, we are in the right area. We've got imbalance lying here, so the market is expected to come down and then push to the upside to take out what? That liquidity that lies on the upside. Now, with that said, ladies and gentlemen, our lessons of top-down analysis ends here. Do let me know in the comment section below if there is any value that you took out from this video. Do comment and give me that thumbs up button so that we can trigger the YouTube algorithm. Now, with that said, ladies and gentlemen, that's it from me. I'm out.